Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. I have an announcement before we get into tonight's video, but we have launched the market grid for WaveTech. Now it is in the portfolioexpert.com website, but you have to sign up for the WaveTech software to get to the grid numbers. Now, if you're already a subscriber, this is a bonus. It's included in your subscription. But I want you to know about this because many people are already making a lot of money. And the goal of this channel, help you guys manage your portfolios and protect your wealth. As you know, I say it every night. And the way to do that is through these professional tools that we offer. And now we're bringing even more of the process that you see on the channel every night. So thanks again for watching and participating. We're working on a major project to bring out a very sophisticated and powerful tool for you to manage your money with. By signing up for WaveTech, you're supporting that effort. I thank you very much for all of you who have already made that commitment. Let's go ahead and dig into the video for tonight. Yesterday's action, we saw a substantial rally. We moved right into some of the numbers that I was talking about hitting in 2 or 3 days. Well, we did it basically in 1 day. And we're moving up a little higher again tonight. And I'll go through all the details here in a minute, but it does appear we may already be approaching the top of the first leg. But as we go into today, we're pre-ADP report on. We do have a couple economic releases today to pay attention to. The Case-Shiller Home Price Index is likely to show a continuing increase in prices as the housing market remains very strong. There were also some trade-related metrics coming out, but they're immaterial for the most part. The other thing is consumer sentiment, and I mentioned this in yesterday's video. It is actually expected to come out at 90.2, and this type of reading is not a recessionary reading. As we go down the path a little bit further, we're going to find out more information about the end of this year and even leading into the first quarter of next year. We have the election coming up in 6 weeks, so that's definitely going to be the driver, and the markets are not likely to get too far ahead of themselves, although depending on how the presidential debate goes on Tuesday night, this may set the tone for some sort of market reaction. We'll see how that plays out. In yesterday's action, the other element that happened is we did see the banks and the small and mid-cap stocks move pretty strongly. While there wasn't a tremendous amount of action in the spreads, they are continuing to structure a bottoming process, which is longer term bullish. As I mentioned in yesterday's video, the intermediate models continue to be quite long and suggest that there is a large consolidation phase coming before the markets are going to be able to move higher. And possibly as we go further down, we might find out that these patterns fail. Let's go ahead and take a look at the database, the charts, and see what they're telling us for Tuesday. Quickly reviewing the dashboard on the Portfolio Expert website. As I mentioned in yesterday's video, we have seen the last 2 weeks some reasonably material selling coming from the intermediate database. It does not appear that it is signaling any type of major rollover. In fact, as I mentioned in yesterday's video, we're seeing some minor selling across all sectors, and it's very even as things are unfolding. So there doesn't appear to be any one sector or anything that's signaled out. And I just want to point out, I mentioned in the opening comments about the market grid. It's right here on the dashboard. Once you sign in, you just click on market grid, and here's the numbers. These are the composite cash numbers that I'm showing you here right now. We'll go through full analysis on the technicals here in a minute, but there's Dow index, all types of information there. Those of you that have already subscribed to WaveTech, there's quite a few numbers there for you to review. As we go to the WaveTech database, we're finally starting to see some minor rotation. There's about 550 new buy signals on the daily models, only about 70 sells. So we did see a bullish ratio, and we moved the percent bullish up to 10.31. Now, I've been going on and on over the last couple of weeks about this 26% level. As long as we remain below that 26%, this is going to suggest there's some potential downside in the market. But the next several days are going to be important on how we trade, and especially as I go through the technicals tonight, how this ABC pattern I've set up, how it unfolds over the next 5 to 8 sessions will determine all that. So we're looking at the balance of this week, probably into the end of next week, before we'll have an answer on the database. As we begin the review of the S&P cash, as I mentioned in the opening comments, we've already rallied back to a 0.382 retracement at 33.52. Yesterday's high was 3360.74, and there is a convergence of moving averages just above the market here, is right at the 3380 level. I'll go through the market grid for the cash markets here in just a minute, but this pattern that we're setting up here suggests we're likely to see this ABC pattern unfold. We should trade right into these moving averages at the 3380. The extreme is the 3397 level, but we're likely to see 3 days up. So if we start from the low, we count that as 1. This is the 3rd day. And be very cautious to look at a reversal. When I show you the market grid numbers, there's some very significant numbers, and the futures have already printed some substantial resistance numbers overnight. But we should come up to these moving averages, set about a 2-day down, and then we should see 3 days up, possibly going as high as the 3442 level. I do not see us getting above that level. The extreme that would be allowed in this pattern would be a test of the high that I just pointed out, which is at 3479. If it takes that level out, that would negate the ABC complex pattern and suggest a full retracement of this sell-off. I don't expect that's going to happen. After today's action, we should see 2 days down and a minimum of 3 days up, which will basically carry us into early next week, and we could extend for a 5-day rally, which would cover us into about mid next week. Today's action will be critical. The other thing that is likely to happen is that we're going to see the potential to fill this gap on the cash market here. That is between 3332 and 3306. If we look at the potential retracement of this B wave, that range is 3306 to 3295, and the extreme allowed in the downside in the pattern is 3278. It should not drop below this 3278 level here, and then we should see that upward leg or complete that upward C leg. The next couple sessions are likely to be choppy, especially if we hit that 3380 level. Going to the S&P cash and looking at the market grid, many of you know that have watched this channel for a while that I always look for clusters of numbers. And we're going to see that the 21 period moving average is 3380.27. You'll see on the tab opened here. The 40-day moving average is 3380.08, so basically the same value. And now if we look at tomorrow's market grid, R2 is 3380. We have a major cluster at that level. If we can trade above 3365 early in the session, are likely to trade up to R2, but look for a reversal off of that level. That will probably be a level that you can actually play off on the short side. As I mentioned a minute ago, this pattern should complete today. It's possible we trade into this 3365, 3380 level and see a reversal and even close lower on the session, which would set up that 2 days down to the numbers I just mentioned, toward that gap 3306 to 3295 with an extreme of 3278. Looking at the daily S&P futures, there's something really interesting going on here which confirms everything I've told you so far. The PPMs are actually rolling over. They're not accelerating, even though right now we're up 7.25 on the session. We did trade as high as 3363, which you'll notice on the grid here is R1. So we hit R1 already. I don't expect that we're going to trade down to an S1, which would be 3328, but it certainly is likely. If we can't get above this 3363 print that we've done overnight, this could set the tone for this reversal. And you'll notice that R2 is 3383. This 3383 will correlate very closely to the 3380 number that I mentioned a minute ago. It does map out good to the R1 that's already been hit tonight. So this will be interesting to see how this plays out. But watch for a downward reversal completing this upward A pattern. If we manage to close above 3363 in the futures, and we could see an extension in this pattern, there is a possibility of going up to that 3400 level, which is a 50% retracement. But I don't see that happening in this particular sequence. The next market to cover is the NASDAQ futures. We're trading up 850, very quiet night in the NASDAQ overnight. The high was 11,448. We have not hit R1 on the NASDAQ. It's at 11,471. The low is 11,383. We're trading between the S1, R1 numbers so far overnight. But just as in the S&P, we're not seeing any acceleration on these positive numbers, which tells us that we're likely to at least go into a 2 to 3 days down pattern. The downside will be somewhat limited around the 10-day moving average, which is 11,005, but there's better numbers to look at here on the weekly. On the weekly, we have the 10-week moving average at 11,172, low so far this week 11,136. We're looking at S1 at 10,709, R1 11,145. We've been above that. So as I mentioned in yesterday's video, there's still a possibility to print an R2 on the NASDAQ, which would be 11,388. So that's a possibility. But as in the S&P, this little ABC pattern should unfold here as well. If we don't get above R2 this week, then expect to see a potential for toward the end of the week, S1, maybe even an S2, so 10,709, 10,465. If I have this pattern right on this upward ABC, we should see some downward reversal for a couple of days, and it could be fairly violent because these downward V waves can be fairly substantial when they unfold, especially if it's just a 2-day pattern. So we're looking at, just like on the S&P, a 3 days up, which we're completing, 2 days down, and a 3 up, possibly a 5 up. We'll see what kind of configuration we get. Next market we'll cover is the US dollar. As I mentioned, US dollar did get that RTX close above the grid on Friday, closed above 94.06 at 94.61, suggesting we'd see at least 2 weeks of downside. Right now, as we look at the grid, we're looking at the potential for a move down to S2, 93.98, and it's possible to go as low as 93.65 in this pattern. Now, so far this week, we've had a 94.11, and S1 is 94.31, so we're through that. So expect to see at least an S2 on the downside. The upside limit will be the R1 94.91. I mentioned this in yesterday's video. The potential extreme high for this week would be R1 94.91. S1 has already been taken out, so look at a R1 S2 possibility 93.98. There is a potential for the dollar to decline into closer to that S3 number before the week is out. The final market I'll cover tonight is gold. Gold is not getting any upward traction at all from the ppm viewpoint. Yesterday's rally acted pretty well, but I set you up for that because I told you if the dollar is down, we should see a rebound and a possibility of getting us between the 1884 and the 1902 level. Now we've printed up to the 1892 level, so we're already printing into this S3 level overnight. But let's go to the weekly chart. That is going to give us a better target for the range for this week. So far R1 1883, we printed 1892, so we're looking at potential for that 1903 level. It's possible we could get an R3 out of this at 1922. If the Dow does decline as much as I just suggested it could, that could print us up above 1900, maybe 1922, and I think we'll see some sort of retracement reaction off of that level if we get up there. On the downside so far, the low's been 1851, S1 1848, probably have seen the low of the week, and the other number to watch for is the 21-week moving average, which was rising at 0.33 on the ppms, which suggests that we're going to remain above that number on a Friday close. We closed right on it last Friday, so look for it to remain above the 1868 level. So if we do get up to this 1903 to 1922 level, the trade back would be to the 1883 level, which is R1 if we can get up that high, but back between 1883 and the 1848 level, maybe finish on the lower end of the week, but above that 1868.40 level, which is the 21-week moving average. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.